Hey guys, welcome back to the Money Question. Today we're going to talk about why this one particular stock could be a really smart long-term investment. And that one particular stock is Meta. Meta stock has been getting hit hard. And if you've been watching the price recently, you might be wondering, what is happening to Meta? Just a few months ago, Meta was trading close to $800 a share. Today, the stock is around the mid-500s. That means Meta is now roughly 30% below its 52-week high of about $790 a share. And that raises a very interesting question. Is Meta becoming a bargain? Or is the market warning us about something bigger? Let's break it down. On August the 18th, Meta shares were down roughly 4% during the session, trading around the 550 area. The stock has also fallen significantly over the past several months, with recent market data showing Meta down more than 16% year to date and more than 26% over the past year. That's a pretty dramatic move for one of the world's largest technology companies. But here's the interesting part. Meta's business isn't suddenly collapsing. In fact, the company is still growing. So why is the stock falling? There are a few major reasons. Reason one is the AI spending. Meta is spending an enormous amount of money on artificial intelligence. The company expects capital expenditures of around $130 to $145 billion in 2026. Investors are starting to ask whether these investments will actually generate enough profit to justify the cost. And that's important, because Meta's free cash flow has been heavily affected by these investments. In other words, the business is growing, but the cost of building the future is enormous. And Wall Street doesn't always have the patience to wait. Reason number two is legal risk. There's another major issue hitting the stock right now. A major trial involving Meta and allegations concerning the impact of Facebook and Instagram on young people has begun. The legal claims could potentially create enormous financial and operational consequences for Meta if the company were to lose. And markets hate uncertainty. Even if you believe Meta will ultimately win or successfully defend itself, investors still have to price in the possibility of a major legal setback. And that creates additional pressure on the stock. But here's what makes Meta interesting. Now we get to the part that I think long-term investors should pay attention to. Meta stock is falling, but its underlying business is still extremely powerful. Meta generated $60.8 billion in revenue during the second quarter of 2026, representing 28% year-over-year growth. And that's not a growth rate of a company that's standing still. It's the growth rate of a company that is still expanding at a very impressive pace. And that's why the stock price becomes so interesting. Because sometimes the market focuses heavily on short-term problems, while long-term investors are looking at what the business could become 5 or 10 years from now. Now what could happen to the stock? Nobody knows where Meta will trade next month, next year, 5 years, 10 years. But analysts are still surprisingly optimistic. Yahoo Finance currently shows a collection of analyst price targets with an average around $754, while the range is extremely wide with targets surrounding from $580 to $1,000. Many analysts still believe the stock has significant upside if Meta successfully executes its AI strategy. But remember, an analyst price target isn't a guarantee. Now, if we look at the PE ratio and the 4 PE ratio of the last few years, and we put in the average of both metrics in the graph, we can see that it's currently trading quite a bit under the average. Beside that, the PEG ratio of Meta is also below 1, which suggests it's undervalued looking at the long term. Now let's imagine a bullish scenario for Meta. Meta continues growing its advertising business AI makes its advertising platform even more effective. WhatsApp becomes significantly more profitable. Meta AI becomes widely adopted, etc. Smart glasses become a major consumer project, and eventually, Meta's enormous AI spending begins generating meaningful returns. If all of that happens, the current stock price could look very different 5 years from now. And that's the reason some investors are looking at the current decline as an opportunity rather than a disaster. But let's be realistic. The opposite can happen, of course. AI spending could remain enormous for the coming 4 years, you name it. Returns from those investments could disappoint. Competition could become more intense, regulators could impose serious restrictions, the legal situation could become expensive, and if Meta's earnings growth slows down at the same time, the stock will remain under pressure for a very long time. And that's why simply saying, hey, Meta dropped 30%, therefore it's cheap, would be a mistake. A stock isn't cheap just because it fell. You have to ask whether the company's future earnings justify the current price. So, what does the current price actually tell us right now? Well, at around the mid 500s, where Meta is currently trading at, Meta is trading at a dramatically lower price than its recent peak. But the market is clearly demanding proof. Investors want to see that the billions being spent on AI will eventually translate into higher profits. They want to see free cash flow recover. They want to see advertising remain strong, and they want clarity around Meta's legal risks. If Meta delivers, the current sell-off could eventually look like a major buying opportunity. But if the AI investments fail to produce the expected returns, the stock could have even further to fall. And that's the key point. The opportunity and the risk are both much larger than the stock chart alone suggests. So, here's my take. If you're looking at Meta as a short-term trade, this stock could be extremely unpredictable. But if you're looking at it as a 5 or 10 year investment, the situation becomes much more interesting. You're essentially betting that Meta can take a business already generating tens of billions of dollars in quarterly revenue and use AI to make the business even more profitable. The current stock price reflects a lot of skepticism. And sometimes that's exactly where interesting long-term opportunities appear. I, myself, currently hold 30 shares in Meta, and I'm planning to buy more if the price drops closer to $500 a share. I'm definitely not planning to sell any shares for the next 5 years to come, as I believe this is a no-brainer in the long term. Thank you all for watching.